Yeah, no, it's already been a year of extreme global challenge, right? But as you said, we delivered actually the strongest set of results in our company's history, and we accelerated growth right across the portfolio. And if you look back the last few years, we've really been positioning the group for an increasingly online world, and we were well prepared for an increased online adoption when the pandemic hit. And food delivery is a good example where you indeed seen revenues really jump at more than 100% when people had to find alternatives to sitting indoors and eating. But what we've seen is actually that a lot of people have created new habits, and even in areas where we've seen that the pandemic has resided, you see those increased level of activities going forward. So we believe that people will go out again. Obviously, they want to enjoy the new life, but also they have gotten in the habit of a very convenient model to eat, and they will continue to do so.
Bob, if you look at the share price, it has not been a decent performer so far this year versus all the other asset classes. I don't know if you heard us about, we're running through the performance we've witnessed. And in your report, you talk about how well positioned you are for some of the new trends, that there's been enormous work to set this portfolio up to capture growth. Are you being somewhat overlooked by investors?
You know, I don't think we're overlooked really. I think there's obviously markets come and go, and that's just the way of the world. And I think the results we've shown today, particularly if you look at our e-commerce portfolio, are actually really hard to ignore, right? So we grew our revenue on just the e-commerce side 54% year on year, and that's even an acceleration from a very strong 51% in the first half, and it's more than double the growth rate of where we are last year. And also, if you look at the value of our e-commerce assets, which we've asked an independent company to value, it's now at 40 billion, and it almost doubled in the last year. So that becomes really difficult to ignore.
Bob, really nice to see you. What is it that people in SPAC world think they know about investing in technology that you don't?
You know, SPACs. I think many people say that we've gone beyond peak SPAC. I think there's been obviously great companies that have used this method to go into the public markets. But also, if you look, there are so many out there that I think the number of good companies doesn't necessarily go up as a result of there being more SPACs out there looking for merger candidates. I think in the end, what has been good for us is that we have a very long-term focus, and we have an extremely global focus, and that means that we can take a view in investing in companies that has a decade of runway, and we can really help our companies to become truly global, because that's what we are. And I think that's something that most SPACs actually don't have in common with us.
Yeah, Bob, you're probably the politest man out there today as well. So basically what you're saying is that SPACs have got nothing on you.
Well, I think they can bring a company to market very quickly, and if that's a good idea, then it might be good for companies. But in terms of long-term growth and really getting the best out of companies, I don't think they do anything that we can't do better.
Bob, can I ask you about the share swap? I mean, obviously the share swap doesn't seem to be going down well with some asset managers. Understandable that you want to close the discount on Naspers, but how much are you listening to those asset managers who feel that it's not the appropriate thing to do, and it just adds additional complexity as they try and understand what the true value of Prosus is and what the true value of Naspers is?
Yeah, no, excellent question. I think, look, we have at the Naspers level more than 80,000 shareholders. So there's and behind every shareholder, even if it's an institution, there's a human, right? So, and people have different opinions. So what has been key for us is to go out and speak with shareholders, and we've done that actually quite extensively. We've spoken to several hundreds of our shareholders that cover almost 70% of our shareholder base, and indeed the opinions vary. I think there's a lot of positive sentiment out there. I think there's also, as you say, there's some questions around complexity, and actually the transaction that we put in front of them is not a super simple one, but the end point, when we're done with this transaction, what the group look like is actually pretty clear, right? So you have one great set of global internet assets, and you have two sets of shareholders on two exchanges. So we think the outcome of the transaction is a very understandable one, and we're getting people excited about that.